Right, hi Gilbey.
Hello mate.
All right?
Yeah.
Good. Been a few weeks, so thought we'd touch base, just see what you've been up to.
Yeah.
Effectively been 3 trades in that time.
Indeed.
The first one was Disney. It sort of, how did it go, basically?
It went well, went in my favour.
Yeah. Yep, it came back. The thing about it was actually it was coming down towards the support point, wasn't it? It didn't quite get there that day, the day before, and then it reversed. Basically said, okay, take your money. The interesting thing there is I think the stock went down 10 days out of 11 or something, didn't it? It didn't really matter what the market did, it seemed to go down. So it was sort of due, just the law of probability. Once you go 11 bars or days or candles or whatever it is in the same direction, you're normally going to get your due at least one the other way.
Yeah.
It's just the law of probability, really. Okay, so Disney was good. I think that was about 1.3%, something like that.
It was, something like that.
Which is pretty good. Second one was Rio Tinto, which was also a sell. And how did that one go?
Yeah, also went quite well. Similarly, I think I took some profits on that, and then when it started going the other way, got out of the trade altogether. And again, I think we made
0.3, I think it was. I think it was something like that.
Yeah.
The interesting thing about that one was it came off, then it gave you an exit number one, so you took 25% off, and then because the stock had fallen, your trading stop had moved down, and it had trailed into the position, so it was trying to protect you what you've already made, and so the exit was triggered based on the trading stop. Interesting since then, because that exit was about a week ago or something, maybe a bit longer.
10 days maybe.
Yeah, it was a while ago now. It's now gone, it's made new highs since then, so it has carried, sort of made new highs for the year, so it's starting to go back up again.
Cool.
Disney hasn't really been doing very much, it's been pretty quiet. And the last one was the DAX.
Yep.
So just to explain to people, it's about stocks, but the system will work on anything. It doesn't matter. You can put it on a currency, a futures, an index. It doesn't matter what it is. It's the same principles. We just think the stocks are more manageable, slower. You know, we're not in a hurry here.
Yeah.
So you saw a signal on the DAX, a daily signal, and you decided to take it and day traded it.
Indeed.
So day trade means that you buy and sell in the same day. Even though it was a daily signal,
It was a daily signal.
So that went pretty well as well.
It went well.
Yeah, I had a look at it. The nominal value of something shouldn't really think about that, because I mean I remember once trading 20,000 contracts of treasury bonds, and when I worked out the nominal value of it, it was something like $2,000 million, something. 20,000 contracts at 100, 100. Yeah, it was
a large number.
It was a very large number, and when I thought of it like that, I went, whoa.
But it's all relative.
It's all relative, isn't it? You know, as a professional trader, it doesn't matter whether you just trade one contract or 10,000 contracts. You've got to follow what you're doing, and the principles are the same, and it's in relationship to what I was allowed to do for it was a big French bank at that point.
And then day traded it, and it came out to be about 9%.
The DAX is a pretty volatile contract. It moves a great deal more than what an individual stock will do. That's for sure. But a nice trade. Did well with it. So good return there. So overall, I think you're about 9% up.
Yeah, I did something a little bit silly in a previous trade that wasn't really a trade. It went up to the tune of, rather a lot to the negative value, but came down where I could eventually take a profit on it.
Yeah, on that one, yeah, it was massively over leveraged, all wrong. The thing that you did well was when it came back pretty much to your entry point, you said, right, let's just get rid of this. So overall, I think it was about a 2% loss, wasn't it? So
not even that.
I wasn't even that. Oh,
No.
okay. So well, that's good. Getting back to where you were, and then subsequent to that, Bank of England came out and did a bit more of the madness of King George and pumped some more fictitious liquidity into the system, and the stock market went roaring back up again.
Yeah.
But we'll steer clear of my theories of the madness of quantitative easing. We don't really. Do we care? Not really. It's
Nice to keep an eye on it.
It's nice to keep an eye on it. I know that it's there, but overall, those sorts of things. We knew it was a big event, so you didn't have any positions coming into that event,
right.
which is the way it should be. So trading safely is the way to go there. So no positions into that event. So now we look forward. We had the non-farm payrolls last Friday, which was unbelievably good. Even revised the previous month up. Again, it's the only stat that I always know about because I know it's the first Friday of the month, and so I can't avoid it. So the rest of the stats, I couldn't tell you when they're coming out. For what it's worth, I just think the numbers are going to be really good until the election. We have an establishment here, and whichever way you look at it, they don't want Donald Trump in. So I don't call me cynical, but I don't think they're going to be producing any poor unemployment statistics between now and November.
There are other candidates.
Yes, there are other candidates that they would like to see. They'd like to see Hillary, Goldman Sachs, Clinton, I think. So does it tell you what the market's going to do? Not really. If we have positions that are open and existing, and they're doing reasonably well, then we'll carry them through payroll, which is now 3.5 weeks away, a long way away again.
Yeah.
Okay, well, good stuff.
Future watch.
I think there's a couple that are potentially getting interesting.
Yeah. Tomorrow.
Yes, and so we'll see how you get on. I mean, have you, just as a question, now that you're 9% up, what is it doing to your attitude to new positions or taking risk, or how do you feel about it? There's a variety of different reactions you could be having, so I'd be interested to know what it is.
Okay, I can tell you when I was doing the Forex, when I was up, my aversion to risk, I don't know, my attitude to risk was a little more nonchalant than it is now. Now, I'm treating this as if it were real money.
Yeah.
And my attitude to risk is, it's a lot different to when I was trading Forex. Even though I'm up, I don't think of that profit as being, okay, well now I've got profit, I can afford to lose a little bit, so I'm going to be more risky.
Yeah.
I feel like after that incident with the FTSE, and it's come back down to being in profit, I really want to safeguard that, and I want to make sure I follow the rules and stay within the limits. So my aversion to risk is just, it's a lot different. I don't know. The whole thing about trading safely is key for me now, even more so.
Well, yeah, you got some profit, so I didn't know what you were going to say. We didn't talk about this before. There's really 3 ways people can go. They go, oh, I've got some money, yay.
That would have been the, before.
Yeah, it could be that. The other one could be the exact opposite and say, oh, I'm 9% up. I don't want to lose anything. I'm not going to do anything. You can go the other way and be a bit paralysed.
Okay.
And
there was a little bit of that, but
yeah, a little bit. which is not, as long as that doesn't last too long,
No.
There's no harm in doing that. You could say, well, I've reached my target for the month easily.
Yeah.
I've really overperformed on my targets. So I'm more than happy with that. So I'll just watch it for a little bit. Why do I don't have to be active all the time. You don't have to be doing something. And so, well, let's just, still quite early in the process. So let's just keep an eye on a few things and, be a bit patient maybe. And of course the third way is just carry on doing what you're already doing.
Yeah.
And as the signals come in, do it. That's entirely up to you how you look to do that. I'm just glad that you didn't turn around and say, yeah, I really love this. I'm going to be really aggressive and start throwing the kitchen sink at things. So
No.
that's what I didn't want to hear. Either of the other two are fine.
Knowing that the system works is so reassuring. For the long term, you don't have to go crazy with it.
No, that's a good point. You don't have to chase things. The market, a very important mantra here, one of my key things, the market comes to you. You don't go to market.
Yeah.
So you wait for it to come to you. And the second mantra is the chart tells you, you don't tell the chart.
Oh, yeah.
So very, very important. Real key things, stick them up in front of your screen. Just remind yourself every now and then. We'll see what comes along.
Yeah.
And we'll touch base in a week or so. We're going to do a Gilbey hangout. So
We are.
we'll record that next week and see how you've been getting on.
Cool.
Okay, good stuff. Tune in next time, and thanks very much.
Cheers.